Just to let you know, our company is Harmony, two E's. We kind of got the name from living harmonious within kind of product and lifestyle. But want to start through the presentation through some introductions of who we are. I'm Anthony Lewis, as I said earlier. I have a background in product marketing, product management, product strategy, engineering by background. I went to North Carolina A&T as well as Jordan. Went to UNC and got my MBA from Duke. My background has been at Deloitte, working at Adobe currently as a contract product manager, and really came into this space of life insurance because there's just a need financially within many communities of color, as well as in younger communities as well. As we did our research and found out very much that our grandparents and parents had life insurance and they had it at a very high rate. And unfortunately, today, my age demographic and younger, we don't buy life insurance at the same rate. And what that causes is these huge financial gaps that will happen if people, one, aren't able to uh, hold on to assets that they may have built through generations and build generational wealth, but also just as we've seen here, being able to just take care of final expenses and going beyond that to make sure that their family members are taken care of. So that's my motivation here. Wanted to make it more streamlined, easier for people to get into the pipeline for life insurance to help to close that financial gap that we see in many communities, and the potential as well for helping to alleviate kind of the generational wealth divide that we have currently. So, Jordan, you can introduce yourself as well.
Yeah, good evening, everybody. I am Jordan Maness. I'm the CTO here at Harmony. And by day trade, I am a software developer and I'm a technical consultant in the corporate sector. And actually, Anthony and I met probably in 2012 through
Mhm.
the corporate sector. And we just stayed connected ever since. But I'm extremely passionate about technology and I'm passionate about helping my community. So I'm based here in Raleigh, North Carolina. I know Anthony is based out of Dallas, Texas. But when he approached me about the opportunity to improve the health and wellness of the lives of those around me, it kind of perked up my ears. And so Harmony is a software platform that allows me to merge both my passion in technology and my passion in helping people to make the community a better place. And so when you think about health and wellness, or when I thought about it initially, I didn't necessarily think about life insurance. So when the idea came about, um, and Anthony approached me about life insurance, me being in my early 20s at the time, I didn't understand the value of having life insurance at a young age until I got married. And then that's when I started to go through the process. And it took a while and it was complicated. And even now, with the policy that I do have, I don't understand the ins and outs of it. But I do see the value of having a policy at a young age. And the reason is because, like I said, the family factor now that I'm married, but also just I think all of us have seen in the past year how the pandemic has impacted us. There are a lot of people that have lost loved ones, and with that comes expenses, that comes loss of income, and so having to see families pull together and try to get GoFundmes to pay for funerals, and having to see people struggle to replace the income that was lost when the person passed away, that really opened my eyes and really made me want to educate myself, but also get a policy and then educate those around me. And when it comes to the wealth gap in America, one thing I do know is not everyone started from zero and just became rich. That is the story of some, but a lot of people were passed down assets. And when I started talking to friends, especially those who look like me, who were young, who were black and brown, when it comes to assets, um, we weren't necessarily passed down land. We weren't necessarily passed down businesses. And so life insurance is one of those tools that we can use to pass down generational wealth. And so that's why I joined, because in building this software platform, we can help to lessen this generational wealth gap by making sure that life insurance is easy to understand, making sure that it's affordable, making sure the process isn't complex. And then making sure that it's as easy as a Netflix subscription. You can turn it on and off when you want. You can modify it however you want, and it's cheap, but you have that peace of mind. So that's my passion and my reasoning for joining Harmony as a startup.
And just in beyond that, we saw the opportunity to disrupt a space that is older, antiquated kind of space, really ripe for technology disruption. We've seen it with car insurance. We've seen it with other types of insurance space, and we think life insurance right now is a great space to be in from a financial perspective, from an investment perspective, and time as well as capital to move forward. So hopefully through this presentation, you'll see more about what we see in the industry, and you can kind of weave in the passions that Jordan just talked about for why we're doing this. So what Harmony wants to do is write $100 million in premiums in 3 years. And so when we think about life insurance, premiums is, as everyone knows, you pay on a monthly basis, maybe you pay it yearly, but to write that amount of premiums in that short amount of time is very much going to put us in a place where you may have heard from a startup, you may have heard of unicorns. Unicorns are companies that are worth and valued at $1 billion. These are where you see Airbnbs and you see Facebooks and you see everyone. They're multiple unicorns, but they have to start from somewhere. And if we can move quickly over the next 3 years, we believe we can also be in that rarefied air. And we would love to bring everyone along on that journey. And so as we talk through this presentation, please feel free to have any questions that you may have. We want to be here not only now, but also throughout the next couple of months as a sounding board to any kind of questions you may have from an investment or from just a thought perspective. So as we kind of approach this, we've talked to hundreds of agents and potential customers and policyholders. And what we've heard, like Jordan pointed out, is that this process is very hard. If you think about either the time that you apply for life insurance, or if you think about people who have applied for life insurance, or people who need to apply for life insurance but don't want to, the process just seems very long and arduous. You have to go get physicals. You have to schedule a time with an agent. You have to spend all of this additional non-value added time to just basically get something approved. And right now, honestly, that's going to be the norm, is to move into an instant underwriting approval. So what we want to do is move from 4 weeks, the amount of time it usually takes to get life insurance approved, down to less than 5 minutes through an approval process. And as Jordan also pointed out, you need a plan that's flexible. I mean, if you buy a 20-year term policy at the age of 25, you might have kids, you might expand your family. And so why should your policy at 25 look exactly the same way as your policy at 35? And quite honestly, the industry hasn't made it easy for people to be able to flex their plans in that way. And we also see the opportunity to support agents in the field from integrating the technology into their platform to make it easier for those people who want to have a relationship with an agent, who aren't as comfortable just buying directly from an online platform, but they still want to have that conversation about potential ups and downs or what they need in their life. We want to make it easy for agents, because also right now it takes agents a lot of time and effort to follow up on sales, and it takes that sales cycle 4 weeks, 6 weeks, and a lot of people drop out of that process just because of how long it takes to go from application to approval. As we start to look at the US market, we see that life insurance is a $700 billion market. It's huge. We're looking mostly at the term life to start off, but we see opportunities within group life, as well as some other plans like annuities, where we could grow and actually expand our take into the market. But $700 billion is currently the size of the US life insurance market when you look at everything. And so as we broke this down, if you look at the total available market, that is the total amount of the market that exists for life insurance. We look at serviceable available market at $51 billion. That's how much of all of term life insurance that we could go after within the space that we're currently working in. And where we think that we can make an impact on that $51 billion is that we believe that we can achieve $2 billion within just term life insurance. But we see a lot of opportunities with group life insurance as well, because we know, as having these conversations with agents and having conversations with business, that process is very paper oriented and very much a time suck for HR professionals, especially because they have to integrate it with their payroll servicing and have enrollment periods that not doesn't necessarily align to when their employees actually complete the applications. So it makes it very tough in that industry and that side of the industry to really make an impact without technology. And so by bringing technology into that space, we actually believe that the serviceable obtainable market, the amount that we believe that our company could be worth, is actually going to be greater than $2 billion. So right now we're looking mainly at term life insurance for an individual direct to consumer, but we see the market expansion into other products within the life insurance space going forward. So life products are unappealing for younger people. Just if you look at what's happening now, the main issues that's around life insurance is a lot around the technology that's being used, the antiquated solutions. So right now, if you look at how long it takes you to get a life insurance policy, it takes you up to 4 to 6 weeks when you go from starting an application to actually getting the approval and your policy in hand. And anything can happen within those 4 to 6 weeks. And a lot of this is due to scheduling issues. It's not even so much as the fact that you have to go and take physicals and actually get the blood drawn. A lot of it is just scheduling those pieces, scheduling that physical, scheduling that blood draw, scheduling a conversation, another conversation with the agent so they can do an interview, getting the information back from the lab sending that information to the life insurance people so that they can actually go in and look at the information and figure out if they're going to approve or not. Also, there's an antiquated distribution model. Not saying anything from an age perspective, but the average age of an agent is 56 years old. And with that being said, a lot of those agents are really making their money off of renewals. They're not necessarily going out and hunting for new business as much as they would have at an earlier age or earlier time in their career. So this doesn't really push them in a way to actually adopt new technologies in a way that would fundamentally change the industry. They would love to get new businesses, especially as brokers look at having new and younger agents under them. So this technology platform that we're building, we believe, can help to change and start to move that distribution network forward, especially as older agents start to retire and new agents begin to try to build up their book of business. And then finally, it's just an adequate support system. If you look at it across who has life insurance in the US, 46% of adults don't have life insurance. That doesn't even include the underinsured people who just don't have enough life insurance. So we see a lot of opportunity in the space of being able to just go after people who don't have life insurance. Looking at a LIMRA report, which is an industry, a nonprofit industry who looks into the life insurance industry, 85% of people say that they want and need life insurance. So how are we not meeting them where they are, or what's the problem? And we see these antiquated solutions, distribution, and support models as one of the reasons why life insurance hasn't really gotten tapped into the way it should be, and the way that we see that this platform can actually go and start to appeal to younger people and appeal to people who are starting to make those transitions in their life so that we have the adequate support to close what we talked about, that $11 trillion financial underinsurance gap. And along that, we see some market tailwinds coming forward. So these are the things that we're following that we believe will help to make us successful. And some of the things that's helping us to revolutionize life insurance in a way that others aren't doing currently, even the big guys. So one of the big things is consumer access to share their health records. So there's a change now that's coming with being able to go out and actually have your own health records and share them with who you want. If you think about how you share your bank account through PayPal, or if you share your financial information through Credit Karma, it's going into the consumer hands. The old way it used to be, you had to have a relationship with a hospital to get their data, the EHR data, electronic health records. But today, there's ways for you as the consumer to give access to whoever you want, and even get access for yourself to your own health records. And that makes it much more powerful for the consumer and much easier for us to tap into the information that's needed to help to cut back the process time for life insurance. There's also a rise in wearable data. So when I talk about wearables, I'm talking Fitbits, Apple Watches. As we see Apple start to put in more money into the health system, we see Google just bought Fitbit and starting to put more money behind that. We're going to see a sophistication that will allow us to tap into a wealth of data that's richer and more and it's deeper than what we've had before. If you think about just taking a physical, that's a snapshot in time. Whereas with your Apple Watch or your Fitbit, we can see heart rate, we can see um, your exercise records, those types of things that can go for days on end, which helps us to adjust risk, but also helps us to reward our applicants because they're getting better, they're getting more fit, which helps in the end win for everyone because you're living longer. And that means that our policy is less risky, which means we can then charge a lower premium for you to actually have life insurance and cover your life. And then there's a rise in non-life insurtech. So we're seeing a rise in, you know, if you look on TV, you see root insurance, you see all these car insurances that's very digital. We see an opportunity to partner with all of these non-life insurtechs to help them expand their portfolio by providing uh, what we call an API, but basically it's easily integrating our life insurance product into their portfolio, which allows them to expand their product and expand their ability to reach more people. And ultimately, this helps us to distribute our product in a lot more places. And we're starting to look into more research, but there's research that's starting to show that people who have life insurance and car insurance with the same agent usually renew their car insurance and renew some of their property and casualty insurance at a higher rate if they have life insurance with that agent. So we think there's some built-in synergies between life and non-life products that we want to take advantage of with our API and our platform. And we start to talk about the product overview. Harmony is excited to be able to partner with those insurance carriers. And as we talked a bit about that API and that protected layer of which we will be able to then make it easily integratable into any digital solution. So not just insurance agents, but financial planners, thinking about different areas where we can, it would be great to just have insurance opportunities everywhere, even in like gyms and different digital offerings of that nature. And then just integrating that wearable device integration. So as we talked about, big tech companies like Google and Apple are increasingly going after this health market and trying to make it more sophisticated. And there's becoming more and more devices as we become more connected from our health standpoint to become better. So we see our product as being this platform that will allow us to have many distribution points and many opportunities to touch different industries that allow us to then integrate into that solution and build our solution out and have people be able to go forward and actually sell our product as a complementary product to theirs. And so in that way, we're able to take the ride along with this rise in both insurtechs and digital financial planning that's going forward right now. And we're excited about that industry and about being able to move a product that everyone wants and needs through new distribution channels that currently aren't being tapped at the rate that they should be. So what's the business model that Harmony is going after? So the way that we see the platform is that we're building a technology platform that's going to make it easy for people to apply and manage their life insurance products. And that includes direct to consumer, which would be any individual could go to our site and buy a policy. It's also working with these agencies, as we talked about, the B2B clients who would then use our platform to sell directly to customers. So it allows them to have an integration point and start to build up a better clientele. And with that process, they're able to actually close the loop faster because currently their sales cycle is so long that they lose a lot of applicants in the process. Right now, they say 1 in 6 people leave the application process because it takes too long, not because of any other reasons, just the amount of time it takes to close and get their policy. So we're gonna see an ability to get commission sales from the agents to get commission sales from the customers. And so Harmony is going to partner with insurance carrier to carry our product. So we will have a product that's exclusive to Harmony, but all of the risk and all of the all the underwriting risk and all of the payouts will come from an insurance company. So if you think about us partnering with the Lincoln Financial or partnering with the New York Life, we would have our own product, Harmony, and our own technology platform, and all of our customer support and customer services will come through Harmony, but all of the risk will sit at Lincoln Financial or at New York Life. And with that being said, we will be able to take advantage of both a commission structure to make money as well as a profit share within those companies. And so that's how Harmony will start to make its money through both direct to consumer as well as the use of agencies and distribution models. We talked a little bit earlier about group life insurance as well, and that's another space where we see we can tap into the B2B market and make a technology change that will help us to drive additional commissions and additional profit sharing models within that space. But if you think about Harmony, Harmony is essentially the technology platform that's delivering an insurance product. So really, we are not the insurance company specifically carrying the risk. We are an insurance product that is technology backed and a platform that will be able to make decisions on its own while carrying less of the risk than being an insurance carrier. So where do we see our competitive advantage? I talked a bit about this is a hot space, InsurTech being one of the fastest things that's growing, both from a capital perspective and from the number of companies. But as Jordan pointed out, data integration is going to be huge. We're tapping into data sources that a lot of life insurance companies aren't getting into. We're trying to be behind some of the new cutting edge data that's becoming more sophisticated. Our distribution model, as we talk about, we're making it easy for agents and financial planners to sell life insurance. And both Jordan and I come from customer centric backgrounds. My time at John Deere, working directly with farmers in the field, or Jordan currently now working directly with B2B businesses. We're very customer centric. And right now, if you look at, they have this score called Net Promoter Score. And Net Promoter Score basically says, do my customers love my product, or do they not love my product? Or are they just okay with what's going on? And so if you have a score better than 30, you're good. If you're between 30 and 70, that means you're good, but people aren't really evangelizing your product. 70 and above, people are talking about your product. They're actually doing word of mouth. They're selling the product. So if you look at the average insurance Net Promoter Score, it's 52. So not in that evangelical part, but it's still good. Life insurance is at 35. And a lot of it is just because of the process, because of it's just very hard. I don't know if you've ever tried to reach out to your agents with insurance. It's usually not a great process unless your agent is good. If you have to go to the company you actually had to speak to, how often have you had to hold on for hours on end or have to wait for somebody to come back? I mean, auto insurance is a great space. I recently had to call a auto insurance, I won't say the name, and I just had to sit on hold for an hour. No callbacks, no way to get in the queue, get in the line. I had to literally hold the phone and let it ring for an hour. And that's just bad customer service in general. So what we want to do is build a more customer-centric product, and we believe we're the team who can do that. And so as we talk about some of the potential partners, Gusto is a payroll service. You may have heard of ADP. So as we talk about kind of the group life insurance, that's a place that we think we can integrate. Root, you may have seen the commercials for the car insurance, and Next Insurance for business insurance. And so integrating into places like this gives us the opportunity to touch so many more people and meet people where they're at in the process. And here's some of the competitors that we see in this field that's kind of starting to move into this space. And so all four of these companies have created this instant underwriting where you can get underwriting a lot faster, get it complete. So that's table stakes, as I talked about earlier. Our advantage is taking advantage of these new data sources, is our distribution model, is this team being so customer centric. And you may have heard of other companies like Policy Genius. They basically are aggregators who are bringing you policies from different insurance companies and saying, "Hey, this is the plan from Lincoln Financial or from other places that match the criteria you're looking at and the prices." So with this raise that we're doing now, what we want to do is we're going to build a model that we can then show to investors and potential customers going forward. We're going to partner with insurers. So with this product, we're not the actual insurers. We're going to have our own products that's specific to this company, but it will be written on what they call paper of an actual insurance company. So the insurance that we sell will be by what the industry rates as an A+ type of company. So our insurance will be backed by somebody like Lincoln Financial or New York Life or Mass Mutual, even though it will have our branding on it. So they get all the great things that come with these top tier companies, but a much better customer experience because Harmony is taking care of that front end. And then we're going to spend the additional capital to help us get ready to build the product. And then our first release is going to be here in Texas. We just think it's a great opportunity from a population size, from just a marketing potential, and the fact that we're licensed here now, but we have the opportunity to be licensed in 22 other states from reciprocity. And then our plan is to be licensed in all 50 states by the end of Q1 next year. And so this is what we wanted to bring everyone here today. And we really see this as a team effort. I mean, no one, no matter if you have the greatest idea in the world, no one gets there alone. Everyone needs the support from an investing standpoint, from a networking standpoint, just from a conversation standpoint. So, you know, while we are soliciting investments right now, we also are soliciting advice. We want to hear your experiences about what you liked and didn't like about going through the life insurance process or insurance process in general. We're constantly learning and trying to develop the product. If you know agents in your network who would love to talk to them, financial planners. So what we really want to do is say, you know, we want to give you the opportunity to invest, and we're using Net Capital, which is a platform that is basically the go-between between us as a company and you and everyone who wants to invest. And they make sure everything is legitimate and SEC compliant. So you're literally buying equity in Harmony. So once you write your check, you are getting equity in Harmony, and you have the same type of equity that Jordan and I have. So as we do better, you do better. As we grow, you grow. We believe in the multiplier effect of sharing it within the networks. And like I said, we're out here looking for expertise and advising, and we love to get advice introductions, and we know we don't know everything. So we would love to hear any thoughts, no matter, you know, where they're coming from, or any kudos or anything that comes to mind. So thank you. Like I said, we are trying to move the needle in life insurance. We think this is a place where it has been underutilized, it has been under talked about, and even people who, unfortunately, who have insurance don't have enough. That's another thing we want to get into, is the education of what's enough life insurance. Having a lot of times the thing we get is, I have life insurance through my job. Yes, that's true. You may have $100,000 of life insurance through your job, but if you have a spouse or you have kids, how long does $100,000 actually last if you have a mortgage, or if you have to pay for health insurance for them, if you were the breadwinner in the family, or if you had a husband and you're the breadwinner in the family, and they have to live off of that for the rest of at least for the next 5 to 10 years, perhaps, or if you have kids in college. So education is just as big as us selling the policy, and we're coming in at both of those places. So like I said, if there's any questions, we would love to get those. And Jordan, if we have any in the Q&A in the chat, you can fire those off. If not, people can raise a hand and we'll call on you and unmute you.
I work for a major insurance company, and I just want to kind of piggyback on what you guys are saying about the Net Promoter Score. I work in an area for a major insurance company where that Net Promoter Score, a lot of companies are putting a lot of money behind how they calculate that, how they can capture that, you know, from a voice of the customer perspective. So it's definitely a hot piece right now. So I just kind of want to, you know, definitely, you know, let you guys know that you're in the right, you've got the right idea, because the customer experience is what's driving major insurance companies crazy right now. They're trying to figure out how to improve it, and if you can beat them to the punch, you know, that's major.
Yeah, we definitely appreciate it. And I will say, as a part of the software that we're trying to build, we do see potential in the customer service, the chatbot, the automated AI chatbot feature that can, make suggestions to customers on an individual basis. So make suggestions about their policies to them via chat without there needing to be an agent. It can, AI can respond almost immediately and help make decisions that way. So that provides a better user experience. And that's something that we hope to tap into as well and offer through our platform.
Yeah, I sit around that whole chatbot piece every day. Again, like you said, that's a major driver as well. So you guys are definitely in the right space because, this 100 and some odd year old insurance company I work for, they're trying to figure it out too. So, beating them to the punch would be great.
Yeah.
So
Appreciate it.
yeah, no, definitely appreciate it. So we do have a question. The question was, can we go over the relationship between Harmony and insurance policy providers? And then is it a revenue sharing model? So no, I might not have went through that the best way, but so if you think about Harmony, we are building a product. So we will have a relationship with an insurance carrier. So let's just say, I'm not saying that this is who our carrier would be, but let's say we have Lincoln Financial, who is the carrier for life insurance. Our relationship with Lincoln will be essentially like what they call a MGA, managing general agent. What that allows us to do is to create products that have the parameters around what we say creates the preferred, not preferred, who gets approved, how much they pay. So we create that product that's specific to Harmony. And we have that agreement with Lincoln Financial that says, hey, in these parameters, this is how we're pricing. This is how we're accepting people. And that allows us to instantly underwrite without having to go back to Lincoln Financial. But it is on Lincoln Financial's paper. So what happens if there's a claim, then that claim is actually handled. Well, we would handle the initial part of the claim, but then the payout and the rectification of the claim goes through our insurance partner. So we have the ability to have this A+ type of company backing the solution that we have, but having a far better customer experience because we are going to be using hopefully far better technology than what's on the market. And from that standpoint, the way that we see how our company gets paid is one, through a commission structure, of course, but the other piece is through a profit sharing. So we're working with reinsurers now, a reinsurer broker now to help us find the right partner and the right reinsurance company.
That was real helpful. Appreciate it. And actually, someone just asked my follow-up question, so I'll let Raven go.
Okay.
Yeah, I was going to add, just in layman terms, for me, we are the software that reaches out and finds potential insurance buyers, and we do put them, some prices in front of them, but the actual backing of the policy is from a carrier. So we have all the software that can do that can utilize big data to generate leads for companies who ever use Harmony. We can reach more people than they can. Right now, or the traditional way of selling insurance is definitely used to be door to door. They're getting more into the digital space now, but our platform will allow them to get in front of a larger audience and have a bigger footprint of people who could potentially buy their products. So we're just a software that sits in between you buying a policy and the company that's actually backing the policy.
Okay. So we have a question from Raven. She's asking if we plan to become an independent insurer or remain that MGA that we talked about long term. So we're still working through that idea. There's benefits to both and there's cost to both, of course. So because we're MGA, we do have to share the commissions. All the premiums and all the profits go through whoever our partner is. But we don't handle the risk that it takes. And one of the big things in life insurance from a regulatory standpoint to be an actual insurer is you have to hold a certain amount of dollars in your bank that you can never really use because you have to be able to back the policies that you're selling. So that means right now, let's say we wanted to write $100 million in premiums, and we potentially would have to have, you know, $200-300 million in the bank with another reinsurer, which is a bigger insurance company, in the bank, just with the capital. So it takes a lot of capital to get started as an insurer, and there's a lot more risk that you have to have. As initially, our thoughts is to stay in MGA for a while, but the thought is, you know, if we decide to go long term and not be acquired by a larger insurer, which is a possibility for an exit, which will be great for everyone at the right price. If we decide to become an insurer long term, we would definitely want to make sure that our risk profiling is set up correctly, so that when we're writing these policies, that we know, you know, we're pricing them at the right point, and that we've got all the learnings we need to make sure that we are a financially soluble and profitable business as an insurer. So I guess that's a long way to say right now we're thinking about just being an MGA, but potentially there could be that opportunity to become an independent insurer. Was there any
question in the chat?
I was going to just give Raven, did you have any follow-up on that one?
No follow-up. I
Okay.
completely agree. There are a lot of risks moving into the insurance space, so that makes a lot of sense to me.
Okay, thanks.
Yeah, I was just going to say we had a question about the process for investing. Maybe you could pull up the Net Capital page.
Yeah, so while I pull that up, so basically you'll go through our Net Capital, and here you're able to either write a check directly. Actually, am I sharing my screen? Let me make sure I am not. Okay. So you guys probably have seen, you ladies and gentlemen probably have seen all the emails that Jordan and I have been sending out, but in there you'll see this link for Net Capital. And then Net Capital, it'll bring you to, that link will bring you to our offering page. And here you'll click invest. And when you go to invest, there'll be some things that from an SEC perspective, they want to let you know about the company and the stock and how it works. And you would just click invest. And then you can either do it through a debit card, you can do it through electronic checks. Of course, you can go through this process here, and then it's going to ask you for some of your information. And then who actually will put the shares in. If you're a US citizen, you have to put some of this, your social security number in, because they have to check to ensure the people who are buying it are actual citizens, and just some SEC rules. But this is all, and this is one of the reasons we are going through the platform, is because they're handling all of that reporting to the SEC. So if you think about it, just like if you were buying stock into a public company, even though you don't necessarily put your social security number in, but there is some SEC filings that's happening in the background that's saying that, hey, you're buying the shares in the company. So you'll just go through this process, put your number in, and then you can pay, like I said, debit card, credit card, check. And I think those are the major ways right now Net Capital is taking investment. Sandra, was that, did that help?
Yes, thank you.
Okay. John, I think we got a couple hands up. Wyatt, I see your hand up.
Hey, Anthony, thanks. I think this was a really great presentation. I want to give y'all kudos. So I, in all fairness, am a complete noob. I don't really know much about life insurance. So my question really is, from the presentation, it sounds like this is a software play / UX and customer acquisition play. So being an outsider looking in, I guess my question is, what is the advantage? I know that you highlighted some competitive advantages, but what sort of differentiates your software UX API from some of the other insurance startups? Like, I know very little about the space, but I know that Lemonade is a name that comes up a lot. So if you could sort of just walk through those, because I assume that everybody's looking at wearable tech, and I have to imagine that every traditional legacy insurance carrier is probably similarly trying to gravitate towards a younger audience. I know that Lemonade is like insurance for millennials. So it seems like this is definitely a trend. And I think you guys have, correctly identified a trend, which is going in the right direction. So my question is really just like, what separates you from the rest of the bunch? Because I know nothing. Thank you.
Yeah. So I can start there. To your point, there are we see basically the industry, especially with COVID, everyone's going to have to move to a faster way of writing and approving policies. It's just going to happen. So as we pointed out a little bit earlier, that's table stakes. So we need to have a product that at least meets that bar. What we've seen in our research is that at least right now, from the companies that are coming out, there may be some people, of course, who are building platforms in the garage that we aren't able to do research on. Not many people are taking advantage of wearable data. From what I've seen, I think Hancock is the only John Hancock is the only company that right now is taking advantage of wearables, and they're not using it to help to understand the applicants. They're just using it as a way to motivate people to exercise, which is also a great thing that we want to build in as well. So we see that as an opportunity to, one, help to accurately price our policies, but also, as you work out and you become more healthy, we want to give you breaks on your policy if possible. We want to help you to lower your premium. If you think about I forgot the name of it, but you put it in your car and it shows you if you drive better, then your premiums can go down because you're a safer driver. Well, if you get healthier, our philosophy is you should also lower your premium because you're becoming a healthier person. You're actually less risk on the books. So tapping into that data is big. The distribution model is actually where we think we have the most opportunity. So you spoke of Lemonade, and honestly, Lemonade has done something that we definitely want to replicate from the speed at which they hit the market. If a lot of people don't know about Lemonade, Lemonade is an what they call insurtech company they started off selling pet and home and apartment insurance, and now they are moving into life insurance. But the funny thing is that they're actually using another company's API to sell life insurance. So they're using Bestow, which is one of the companies that we say is our direct competitors. They're using that to sell life insurance. And so we see that as an opportunity that we also have from competitive advantage that a lot of these other companies aren't doing currently, and embedding into this rise of insurtech companies that's outside of life insurance. So right now, what we've seen is Lighter Life and Bestow are the two companies that are really trying to build this API out, and Bestow being the only one right now that we have seen kind of integrated in different places.
Got it. Very helpful. Thank you. And great job, guys. Appreciate it.
Thanks.
So I see another question in the chat that's geared more towards the technical piece. Being completely software based, what type of infrastructure do you have in place that would support a streamlined underwriting process that would support your business model for the long term? So I can take a stab at it, and Anthony, you can follow up or give input as needed. But we definitely have found some technologies out there that we can partner with and bring into our platform, some other APIs that have already mastered the process of gathering electronic health records. So we can tap into those kind of resources in order to help make decisions on the fly about that pertain to underwriting. And there are also, I guess you can, I'm going to call it underwriting as a service platforms. that we plan to tap into as well. That would allow us to, at a scalable pace, build out policies and automate through that platform and that API the risk management of those policies and the distribution of those policies.
And I think I'll just add on as well. This kind of also falls into kind of the question that Raven had around MGA and becoming an insurer. As we look at kind of the technology, we're going to use these off the shelf pieces. So to Jordan's point, there's these underwriting technology, but we still put our own rules in. We still have all our customer support stuff that we can then customize to our needs. But as we do the evaluation throughout time, we will decide whether it makes sense to continue to partner with them or to build our own internally. So that's not a question we can necessarily answer now, but what I can say from that standpoint is that we are eyeing both continuing to partner as well as what it looks like if we built our own systems natively within the company. But initially by partnering, we're able to get off the ground a lot quicker and get that initial push that we need to get people used to our platform. Did that answer your question, Mr. David? Okay. Were there any additional questions? Well, if not, Jordan and I really appreciate you guys. Oh, here we go. So question, do you have an internal view of what Harmony's valuation could be? So as we talk about valuation, just for everyone on the call, valuation is basically what our company is worth. And if you look at the amount of, basically the way it is computed is, you know, before you go become a public company, the amount of investment at what percentage of the company creates a valuation. So if someone invested $1 million for 10% of your company, then your company's worth $10 million. So valuation is a way to understand growth in the company, to understand, you know, how profitable, or not profitable, but how big the company is. And as I talked about, we're trying to reach that unicorn status of being $1 billion company. So that's $1 billion valuation. Right now, we see the opportunity could become $2 billion. And so we see the opportunity for $2 billion as where we see the company could move towards, at least from the modest numbers that we've looked at from a market share percentage. But right now, we're so early on, I can't say the valuation that's placed on it now is still kind of what they call frothy, or like very not tangible, because we haven't done have any revenues at this point. But we are shooting for that unicorn billionaire status. Jordan, I think, do you have some questions directly at you? Or Mr. Blakely? Let me make sure, did I answer your question? Okay, thanks, great. Jordan, did I miss any questions? I think there may be some for you.
One question that we missed directly to me is, after investing, is there an estimated time on our return and an estimated amount?
So with this type of investment, we can never, and legally we can't either, promise any kind of return. So we can't say if we have a 10x or 20x or any of that. So we can't say what the returns will be. And I can't actually say that we will be profitable because I don't know that to be true at this point. What I will say is that as we grow, your investment grows as well. So we only make money, Jordan and I, if we were to sell the company or IPO, we make the same return per share that you make per share. So basically, our shares don't come out before anyone else's. We all would be in this together from the same, what they call common shares. There's no preferred status that Jordan and I have in this. So we will rise together is what we plan to do. And so the returns would just be based on, how well we execute, how well we do, and then the exit. But I can't put a timetable on it. And I can't really put a valuation legally on what that could look like over time. So, and just from, so it looks like there's another question about a cap table. So cap tables are basically the investors everybody who invests in the company ends up on what they call a capital table. And what happens is that those names are there for how much percentage of the company that they own in the company, how many shares basically. And currently we don't have a cap table. This is our first raise. So currently you all will be our first investors. So this is what they call a pre-seed family and friends round, kind of is what we're at right now. So we don't have a cap table with anyone on it at this point. And how much equity are we raising currently? So right now, this valuation, we're giving up 8% equity. So that's how they arrived at this $2 million, 7.5% equity, how they arrived at this $2 million valuation that you see on the site for 150K. As we go along, Jordan and I wanted to continue to be able to control the decision-making process, because what happens with a lot of companies as they get in trouble is they lose control of the company. They give up too much equity to other investors down the line, bigger investors. Jordan and I want to avoid that as much as possible. We would love to retain somewhere in the neighborhood of 70% of the company as time goes along. And that includes also offering our employees, as we build a company, what they call an option pool, which is basically their shares within the company as well. Did that answer the questions around the cap table? Okay. Did I miss any question? Let's see. Did you see anything, Jordan, that I missed?
Scrolling through. What's the strategy to drive business to the platform? Digital marketing, traditional marketing, outbound sales calls to prospective customers. I mean, I will say just very briefly, I know Anthony has a lot more to add to this, but calls like this is where we're starting. We're definitely taking advantage of social media and driving strategy through that platform in terms of educating people on the insurtech space, on life insurance, making people aware of the opportunity through social media platforms. We do have an intention to create some content that is scheduled. So something consistent, an example, a blog, a podcast, where we could then bring in other industry experts to have a conversation about what we're trying to do. And then, also how you all were reached out to, kind of email marketing campaigns, just kind of starting off with the basics, and then trying to partner locally in our respective cities with organizations that serve as incubators for the startup space to try to get the word out that way as well. So those are just awareness tactics, but there's also some more strategy to drive business to the platform that we're still in the process of coming up with, and Anthony might be able to get some more input there.
Yeah, and the other thing is, as we talked about, direct to customer marketing is expensive, but it is a necessary thing that has to be done. So we will have some direct to customers, but really, Jordan and I want to be out talking to people, getting people excited about the platform, working the kinks out, making sure that the platform is something that people like. And actually, everyone on this call is someone we're going to call upon to take a look at it and see if it's something they like. See if it's a customer, if it feels good to you, even if you're not potentially looking for life insurance, if that process feels good to you. So we want to have those conversations. We also want to work, as we talked about, through our distribution network. So we're going to continue to tap like this financial planners we know. We're going to go through these B2B go-betweens who can then multiply and spread the word to their client base. So we'll have a direct-to-consumer marketing, but that wouldn't be the crux of everything we do. We will have what they call B2B2C. So we will be marketing to other businesses and agents. So there's a lot of conglomerates of agents, independent agents that's out here that we can tap into. So one of the big ones is one called Smart Market. They basically have hundreds of agents on their platform. So building those relationships where we can quickly get a lot of people kind of in our product and in our process who can then go out and sell that to multiple people is how we can see our marketing dollars going a lot farther. Did that answer the question? And of course, I mean, it's all sales, of course. So, I mean, we will also be doing cold calls ourselves, being on the phone, talking to people, all the traditional ways as well. So there was another question. Are there any detected risk or potential negative impact at all by scaling a historically long process for approval down to a few minutes? So in life insurance, what causes that long delay, if you look at, let's say you look at the 4 weeks it takes to actually get that process done, 2 weeks of that is actually scheduling issues for the most part. And so that's basically from the time you talk to the agent, they need to get you scheduled for a physical. You need to get scheduled for a blood draw. You need to be scheduled to have another interview with the agent. So that 2 weeks is just scheduling. So it's not even any of the work actually being done. And then the rest of that is getting results back from the lab. It's getting what they call a physician statement to the underwriters at whatever life insurance company that's there. So really what we're cutting out is, 3 weeks at least of processing time. And then just the scheduling and getting results back. And then the other piece that may take that week or so is that someone actually has to sit, and the underwriter, they have now some additional technology to help them go through that process quicker, but someone still has to take these hundreds of pages of physician statements and go through those to underwrite the policy. And then that policy has to be delivered to the agent, and the agent then has to deliver it to the potential policyholder. So a lot of that time is specifically just around scheduling. So by having this process that if you've already had a physical within the last year, a new physical probably isn't going to tell us a lot. If you've had blood drawn in the last year as part of your physical, you doing it again isn't really going to probably help out a lot. So the negative impacts that we see there is potentially the same negative impacts that could be seen from an underwriter, a normal underwriting process, in the fact that a physical is really just a snapshot in time, and how you perform in that physical will determine how you're underwritten in the process. So the impact that we could see there is just because you also have, the other thing is from a customer perspective, in life insurance, you have 14 to 30 days, depending on what state you are in, to actually decide if you want to keep your policy or not without any kind of issues. And so even if you feel like you've been rushed into a process as a customer, you don't have to keep that policy. You can actually return it for a full premium refund within 30 days in some states. Okay. Do you all have PDF or PowerPoint versions of the investment deck for us to review? Yes, we can definitely send out the deck. I'll make it into a PDF form and we can send it out to everyone. And we'll make a copy of it, of the deck as well, and put it on the website. Okay. Any additional questions? Or Jordan, do you see anything I missed?
No, I don't see anything else right now.
All right. If any additional questions come up as you think about this or look through the pitch deck, feel free to call us, send us a text, send us an email. Jordan and I will be more than happy to jump on a call or respond as quickly as possible. Like I said, this doesn't have to be a decision tonight. We're going to be raising capital for the next month or two, and so while we want to get the momentum quickly, because there are some things that kind of unlock within that capital as we get. So once we hit $10,000 of our raise, Net Capital opens up their network to other angel investors and actually start marketing our investment raise. So we are trying to hit these milestones quickly, but we want to make sure everyone feels very comfortable whether or not they are wanting to invest in our platform. So feel free to, if any additional questions come up, to ping us to let us know. We'll be if we don't know the answers immediately, we'll go find those answers. And we love any feedback that anyone has as well. So we really appreciate y'all taking time tonight to sit with us. And the other thing, like I said, the multiplier effect, if you think someone would be interested or someone has some, either interested from an investment standpoint or advice or just somebody you think we should talk to, we would love that as well. So we see this company being built as a community and not just Jordan and I. So we really appreciate y'all tonight. Jordan, did you have anything else that you want to follow up?
I think you said it all. I appreciate everyone's time. I think everybody stuck around for the most part. So it definitely shows that there's some interest. And I do apologize for my camera not being on. It sucks as a tech guy that the network at your house isn't supporting a video feed. So, but I'll definitely looking forward to the many calls and texts that are coming our way as far as questions and feedback goes.
All right. Everyone have a great night. Really appreciate it and appreciate the kudos as well.